right, so now we're gonna get straight into it. Steve Harvey shit's fire. Motivation. Um, okay. We'll check the chat real quick and then I'm gonna open up. We're gonna get right into the market. Y'all could put we'll go straight into charts. So if there is stocks that y'all want me to look at, um, drop them in the chat and I'm gonna go through all of them. Blessings, Crystal. The mute button be kicking y'all behinds. What's up, Talisha?
Yeah, how's it going?
Amazing. How about for you?
Really good. What's going
Are
on
you
here?
outside getting that sun?
Yes, I'm actually
All
on
right.
vacation for the next week or so, but I still, charting is my love language. So we're out here in Puerto Vallarta for a few days.
Ooh, have fun. Enjoy.
Thank you, thank you.
That weather looks beautiful.
It's nice.
All right.
Language. I like that.
Destiny, happy new day. What's up, Ash? What's up, Malika? Freddie, Slick, Angie. It's TBW. Um, what's up, Alex? Belina, what up? What's up, everybody? What's up? What's up? Okay. Damn, what the fuck? Y'all dropped them stocks fast as hell. Alright. Alright, so I'm gonna pull up meta. Damn, that's a lot of stocks.
You asked for it.
I didn't think it was gonna be flooded like that, and they're all different.
You're getting popular.
Mm,
But you got
all right,
76 of us in. Yeah, you asked for it.
it's whatever. It's cool. We got 2 hours. Whoever could stay on, got 2 hours of this. I am sharing my screen, right? All right. Let me just make sure. All right, boom. What's up to everybody that just joined?
Good, brother.
I
What's
didn't
good?
miss nothing. I'm about to get straight into stocks. I wish Rams was on because I wanted him to walk me through his last. He sent me an indicator that I wanted him to walk me through. I tried using it, but I want to see how he breaks it down. Um, okay. So right now I'm looking at futures. Basically, this is the S&P 500 futures. So this is the strongest economy in the world. They would say is the United States. So basically, these 500 companies are 500 of the best companies in the world. So that's what I'm looking at right now. The trend is bullish today. Um, we are currently approaching resistance right now. Candles bounce off candles. I'm looking at this green candle right here and this red candle right here. There's two areas where buyers opened up at. I'm taking the body of those candles. And now if we look at price, the current price, we are rejecting off those two body candles. Okay, boom. Why ain't my screen? All right, boom, boom, boom. So I look at that. So I have resistance right there. And now I'm looking to see what my moving averages are doing. My moving averages are sideways. So that's telling me we should start, we'll probably, if we do run up past our resistance, we'll have failed rallies like how we had over here. And we'll just trade sideways until we go up or down. 5 day moving average is my thick orange line. That's the only one that's rising up. So let me show you something real quick. One moment. I feel so at peace right now. I'm really calm.
Feels weird, right?
All right, boom. Um, moving averages roadmap is called. If you don't know what your moving averages do on your chart, you should take them off. Moving averages roadmap, because you have to know what they're used for. Um, so my 5 day moving averages strong momentum. So it's starting to rise up, and we're above that strong momentum. It's starting to rise up, but it's not like right here. If you look at the orange one, it was rising up. It was a steep hill. That's what I like to see. This is barely up. That moving average could slap back down and go sideways, but strong momentum and above it, it lets me know buyers as of right now are in control for the day because I'm on a daily candle. My 10 is the green. So my 10 is the short-term trend. So if we look at our green moving average, what is the short-term trend showing? It's slightly sloping down. I call it rolling over. So when it's sloping, you're at the top of the hill. When it's starting to roll over, you're starting to fall a little off the cliff. You're getting to the cliff. So that's what the 10 day is doing. Short-term trend is down or sideways as of right now. 20 day is what? A pullback in an uptrend. So if you're going up, you want to see it come to my yellow line, which is the 20 day, and bounce. If it bounce, that is the structure being made. That is, remember, you don't go straight up like no stock. Some stocks, damn, I wish I had my Beats laptop because I could draw on the screen. Um yeah, it's not gonna let me draw how I want to draw. Let me
Hey,
see.
Ed,
Huh?
you said 20 days of pullback on an uptrend. Is it a pullback regardless of the trend or is it just on an uptrend?
Um, it could be in. I use it for the downtrend as well. So if I see it, if I see us under the 20 day, I'll look for us to um retest the 20 day by going up, and if it rejects off of it, it's confirming that sellers are in control. So you could use it both ways. It's the pullback
Oh,
support. Um, so no stock goes straight up like this. Most stocks are going to. It's not going to let me draw how I want to draw. Most stocks are going to go up. Like if we're here, we'll go up to like you'll see a lot of candles go 50. I don't know why it's not letting me. It'll go like 50. Let me see. Let me do full screen. So 50%, that's what you use fibs for. Um, so you'll see the candles retest like 50% of the previous candle or 50% of the structure. Um, trying to, I don't want to draw. Let me see if I could draw it now. That's on the full screen. Nah, how could I do this?
Hey, Ab, there's a path tool on the Trading View
Oh, yeah.
sidebar that could work.
Thank you.
Uh-huh.
Appreciate you. So we'll go. It's still not letting me. Let me see if I could do it up. So this is okay. Yeah. So most stocks will go up. All right. It normally don't do this. All good. All good. Let me see if I drop down the time frame because it's important that I show this. You're still not gonna let me.
Or try zooming
Most.
out,
All right.
like so it's not so zoomed in, and then you might be able to see a little
Okay.
bit more.
Okay, I got you. Let me see. I'm gonna make it work. So most stocks are going to do this right here. They're not going to just run up. So they'll go up. So this would be the low. Then this is the high. What it will do a lot of the times is come down 50%, and if it bounce, it's creating structure. It'll bounce and probably consolidate right here, meaning it'll range, so it'll trade sideways. Like you'll see, could I at least scribble? You'll see something like, it's not letting me. So you'll see this area right here will just be candles, just trading sideways, all right here. And that'll happen because it's setting up a structure. So the more candles you got in one spot, the stronger so if candles are all building up, our floor gets stronger and stronger. It's like beams being added to the structure of the floor. So that becomes stronger and stronger and harder for candles to come down and break that support. Um, so you'll bounce right here and then you'll shoot up. So you'll go up, hit highs, come down, retest about the 50%, and then shoot up and make more hot, make all-time highs again, and then you'll come back down. Now you'll test this 50%, the previous high right here. So we'll come back down and retest this area right here, and we'll probably bounce off of it if buyers is in control, and then we'll hit another all-time highs and shoot up again. So
It's,
this
I think
basically
it's the sun pump. It has to be.
this is basically like this. It'll do this. Um, and if it's puts, the same thing. Puts a breakdown, and let me see. When they break down, you want to see resistance become, no, you want to see support become resistance. So if we're down here, support is our floor. So this is our floor, our white line. We want to break it. We'll probably hit this line, then we'll come up and retest what was support. And if we reject, you want to see candles consolidate right here, trade sideways, showing now that this previous support, the floor, has now become the new ceiling, which is resistance. And then we'll go down, then we'll come here, we'll probably come back up, retest to see if now this previous support has now became resistance, reject, and then we'll go lower. Stocks don't run straight up. That is what structure is. Um, so now we'll do it using the candles and look at the rejection we're getting right now from the two previous candles that we did on the daily. I use 2 to 3 candles on the daily, 4 hour, 1 hour for my support and resistance. I need 2 to 3 daily candles. Sometimes I use two. Um, and right now we use two, and we're rejecting that area right now. We are rejecting that, and this right here is highs for, was it July 24th? So one thing you want to see happen to continue an uptrend, you want to see the stock break the previous day high. So what I mean by that was yesterday's candle, which is this red candle right here. The high will be the top of this wick right here. You want to see us break this level in order to get any continuance to the upside. So this will be the level to break above to see us in a bullish trend, to be comfortable for the stock to continue up. We're not even close to it. We've been rejecting the July 24th area, which is these candles over here. So that's telling me, even though we're ripping for the day, that's telling me not to trust the run. Um, we're still weak at the same time. So now I'm gonna go. So yeah, that looks good. And then now look, this was kind of an indecision candle right here, this green one, and then the one after engulf this green one, meaning sellers are more in control. Um, this wasn't a full candle, but almost. It still engulfed this previous green one. So that's letting me know sellers are winning the battle. So now we want to see where the ceiling is. I'll use this green candle. I could have used this red one right here. So I could go like I could do two trend lines, which sometimes I do. And why I'm using this because candles bounce off candles, right? Candles reject off candles. So look at the body of that candle is rejecting the body of this previous candle. So I'll have that line there, and then to be safe, I'll use this green one as well. This green one is so I don't panic when we break above that white one. I know I have another line because this is a mental game. So if you see that I broke this level, you might panic because you don't know what's next. And then stocks move because it's all a mental game. So we know if that stock is moving away, we want it to move, it'll do something in our mind where you get FOMO. You have the fear of missing out and you'll hop in it fast. But if you have that other line, you're like, well, I still have this, and that. It helps you um, stay balanced. And that's how I stay calm. I'll use those lines, and then I'm still looking at my moving averages. I'm not on one time frame for too long. That's very important too. So 30 minute is my main time frame. Why? Because I'm a 5 day moving average guy, and that's based off of the 30 minutes um, worth of data. But it's how you set it up is it's 5 days, but it's still going to be used on the is used best on the 30 minute time frame. 30 minutes go evenly into 6.5 hours of trading. Um, so you'll see me a lot of times on the 30 minute or the 65 minute time frame is another good one. Um, so now I lost my train of thought. 5 day. I lost my train of thought. Okay. All right. Boom. 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 All right. That's futures. Lost my train of thought, so I'm gonna move on. Um, I'll do SPX in a little bit. I want to get these stocks out that we got. Um, yes. Understand market structure is a cheat code. Kurt. What's up, Kurt? I am a swing trader. I haven't took a day trade in probably about a month. Probably a month. Like if I do day trades, it'll be 2 times a week. I'll allow myself to, well, 2 days out the week I will allow myself to do a day trade the most. But sometimes I don't find no plays. Sometimes it's one day trade. Sometimes there's no day trades at all. Like right now, I haven't been really in the mood to sit here. Just what's going on in my life right now, I can't sit here and just constantly watch the stock how I normally do. So I've been in and out of it, in and out, in and out. So I've been swing trading more than I still I always been the swing trader first, but I still would mix in the day trades because who don't want to try to get that fast money with the passive income? So I would do both, but now I've been really straight passive a lot. And I don't like how the market is anyway with the all-time highs. It makes me not want to put my money out there like that. So the day trades I've been trying to stay away from because look at this. So this is liquidity. Liquidity is what? Liquidity is a whole bunch of money in one. So you have a pot in a dice game. It's called the pot, and the pot is everybody's money that they're throwing in. Um, so liquidity is that pot. So that's where all the money is at. So us traders, all of our money that we're trading is in this zone. So where's my rectangle? So my rectangle, I'll use so this is like supply and demand. If you do that, you'll know what the rectangle is for. So I want to find my resistance. So my resistance, I want the most candles rejecting at the ceiling. Why? Because resistance is the ceiling. So I want to get the most touches. And then I also want to confirm it by seeing the candle bounce off of that resistance, because support used to be resistance and vice versa. Resistance used to be support. It could always switch. So I'll take this area, and then my support, I'll probably take this area. I'll take this right here. The most touches from the bottom will be this area. We'll take this money too. And then we got the top. So we got all this money. I could even, cause let me see something real quick. I'll take this money too though. Okay, this is liquidity. This is the pot of money. So this is a lot of money, but this is the 30-minute time frame. So we have to remember that. So this goes back to July 21st worth of money. So now will this be snatched? So now you have that pot of money in the dice game, and somebody just walk up and snatch that pot of money. Your job is to guess basically before he snatched that money, is he going to run up with the money or down with the money? Up will be buyers, down will be sellers. So I want to see it break out of this rectangle to the upside or to the downside. And you always wait for a retest. Why? Because right here, the money was thrown in. The money was thrown in. This money was snatched. And another thing is when it's snatched out, all they got to do is touch the rectangle one time, and it just took all the money from the. It don't even have to come all the way up. If it was going to the downside, I don't need it to come all the way up here and then go down. I needed just to tap this rectangle, the bottom of the rectangle, and now I just took all of that money, and then I'll shoot down. Same with the upside. If I broke out of this rectangle, all I need to see it do is come down, tap the top of it, and then go up. It just snatched all that money. So you want to see which way it's going to go before it even goes that way. And I do that by looking at my moving averages, my green, yellow, orange, blue, red. What are they telling me on the short term? My 5 day, 10 and 20, they're rising up. That's telling me on the short term, we are bullish. We're still, this is the 30-minute though. So you want to go from 15, you want to go from 5, 15, 30, 1, 4 daily and keep weekly too, and just keep going down. I only look at monthly just to see where uh, a moving average could be, because my moving average on my weekly could be lower. But if I'm in calls, I might have, I might have broke above a moving average that I could have rejected at. So I broke above that moving average. But if I go on my monthly, there's still a moving average that's declining down that I could reject at. So you want to check monthly and down. I really do. And then I want to just pay attention to how they are. So we broke above all my moving averages. The 100 is still sloping down like a hill. That's the blue line. So that's telling me the momentum ain't too strong yet. And then the 200 red is starting to rise up a little bit, but it's still going sideways. And these short-term moving averages down here, they're just rising up. Like the uptrend is just beginning. So, but this could lay back down flat and just trade sideways. So you don't want to jump it. You want to wait until these moving averages lift off the floor and start to move up. Um, and yeah, I just want to see which way it's going to break out. out. So I'm looking at a bull flag setting up. Why? Because this is the pole right here. So the pole is starts right here. Our floor, we have multiple candles bouncing off of this purple line, which is the AVWAP. Um, AVWAP is the average volume weighted average price. Um, so this is the pole right here. And then if I was to have like, I would say, let's see, it'll be, I gotta put this trend line up. So you'll have your trend line, and then you'll have the bottom of your flag. I'll use this candle, this big green one right here, the body of that, and this is the flag. So now you want to see it play out in that tight area, and what it's going to do is squeeze. When it gets down to the end right here, it gets pinned, and then it breaks out, and you'll see price do this right here. Where is it? Boom, 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 boom. It'll get down here, then it'll break out, come up to probably where these candles are rejecting at, right here. It'll reject right here, come down. You want to see this trend line become support, so you bounce off of that, then you'll see it shoot. That is a bull flag. Um, I was supposed to start trading, well, showing y'all stocks, and I just went on a rant. Um, bull flag. I'm gonna just show y'all this.
Appreciate all of that, man. I really do. Thank you. Thank you so
All right,
much.
you're welcome. So this is going to be a bull flag pattern. I'm gonna share my screen real quick. What's up, Davion? I see you. Seeing you quick. All right. Um, I appreciate everyone that is here right now on the Zoom. We are at 98. The maximum is 100. Um, I think this might be. I had one other Zoom, but it was with Trap though. This might have been the highest that I got so far. I think 90. I went over it one time. This so this might be the third time that I hit this. So thank you. I appreciate everyone for their time. Because I know our time is important. So I'm about to show y'all this video real quick. I'm trying not to really start um, going on rants until probably like the last 40 minutes.
A bull flag is a continuation chart pattern that signals the market is likely to move higher. To identify a bull flag, look for a strong trending move higher. This means the range of the candles are more bullish than usual and they tend to close near the highs. This forms the pole of the pattern. After the strong move higher, the market needs to take a break. Here is where you can expect a potential bull flag to form as the market does a pullback. The pullback forms with lows and highs that are parallel to each other and should consist of smaller range candles as compared to the previous bullish move. The retracement should be lesser than 50% of the pole. The tighter the consolidation range, the more likely the market will break out higher. When price breaks above the top of the range, you can look for buying opportunities. Take a long entry above the high of the breakout candle or after a pullback to the level after breakout. Place the stop loss below the bottom of the range. Set the target equal to the length of the flag pole from the breakout point. A bull flag is a continuation chart pattern that signals the market is likely to move higher.
11:25. That is a bull flag. So now it's a lot of stocks. KT, what up, KT? What's up, Jolly? Can we apply some trade with stop loss and take profit? What the fuck? Um, I do want to actually take an actual trade and set a stop, but it's going to be different setting the stop loss because not everybody use the same broker. I use Fidelity and Webull. Um, what's your thought process when setting up your swing? What's your thought process when setting up a swing trade? I'm trying to see what I want to get into. Just sent Rams a message to see if he could jump on. Perfect. Appreciate you, bro. Okay, I can't really focus, fam, in gym, but I'm gonna catch a replay. Word, sir, go get it. What up? How's it going? Mm. What's up, Andre? First time? What up, bro? Porsche. Okay, boom. That's real shit. All right, boom. So now we about to tap into stocks. So now you're gonna see me break them down, but I'm not. So the first stock, that's how I'm gonna do it, because I want to fly through the stocks. Um, I'm gonna do support and resistance to current price, but I'm not gonna really sit here and break it down how I normally would, because when I start doing that, I stay on one stock way too long, and then that one stock becomes the whole Zoom. I did that with uh cost for the first Zoom, and then I did it with PANW last week. So I'm gonna fly through, but you'll still learn because you'll be like, okay, he did support and resistance this one, and he did it on this stock. He did it on you'll start to grasp the concept because there's a lot of stocks here, and the process is repetitive. So you'll get it. All right, boom. The first stock is Meta. Tamara, what's up? Wait, what? And take that monkey shit off. You embarrassing us. Hello. All right. AC is kind of cold in this motherfucker. All right. So the first thing I do, might gotta go in that sun real quick. When I'm done with these stocks, I'm gonna have to go get some sun in my melanin to bring my melanin up. Um, it's kind of fucking cold in here. Meta. All right, boom, meta. Orange line. Damn, I can't even put it right here. My orange is the 5-day moving average. My green is the 10-day moving average. My yellow is the 20-day moving average. See something real quick. Roll map.
Real quick,
5 strong momentum, 10 short-term trend, 20 days the pullback, and the uptrend or downtrend. I used 100. That's where I want to. That's the perfect spot to buy a stock. Is if it bounce off my 100-day moving average. The 200-day above the 200 moving average. You don't want to be in puts. Buyers are in control. Above the 200 moving average, you don't want to be in puts. Buyers are in control. Below the 200-day moving average, you don't want to be in calls. Sellers are in control. Below the 200-day moving average, you don't want to be in calls. Sellers are in control. Um, Someone asked me if I was a teacher the other day, and I've been listening to myself. I'm like, I really could teach. I do coach the little kids flag football. Sorry, I go on rants a lot. Um, and I think that's why I'm able to break down how I trade and stuff but the kids are actually smarter than us though, to be honest. They pick up so fucking fast. Um, yeah, kids They are smart as hell. So boom. 5-day moving average, thick orange line, that's at 766.23. It's rising up. I like to see that. But the only bad thing is rising up and we're below it. So that can act as resistance. Um, so just the first thing I do though, you want to see what is the trend. You want to zoom out. Always zoom out. Don't have it so tight because you're not able to see everything. You need to know the market structure. If you just see a stock going straight up that didn't come down a little bit, you don't want to really get into it. Why? Because there's a higher probability of that stock falling. So this is meta. The trend is what? It's to the upside. Why? Because we're going up. You'll know when it trends to the downside. It'll be the opposite of this. Um, you want to see pullbacks as it's going up because that's a healthy uptrend. If you don't see pullbacks, that's not a healthy uptrend. So on a weekly time frame, that's what I'm on right now, W, you'll have, I am aware there's people on here that are new, so I got you. These are your intervals. 12 month, a year, half a year, quarter of a year, 1 month, 1 week, daily, 4 hour, 1 hour, 30 minute, 15, 5, 1 is what most people use. Um, what? What? I'm in the wrong. I knew it. Something wasn't right. Um, I'm in the wrong trading view. Hold on, real quick. I'm in the wrong trading view. Hmm. Um, I gotta sign in because. um, where is it? Where is it? Okay, sign in. No. Oh, okay, okay. Um, most of these stocks I'll probably have charted, but I'm going to delete it. But okay, I'm signed in now. So now I'm gonna share my screen again. Why is it doing that? That looks crazy. My 3. That's what's up, Portia. And what up? She has her 3-year-old watch when I chart. I got 4 kids now. My daughter, I got 3 boys and 1 girl. My girl's the youngest. 10-year-old, a 6-year-old, and 2 5-year-olds. Jakai, Jewels, Jaquise, and Araya. My 10-year-old been watching me do stocks since I started trading. So about 3 years of just trading. I've done stocks and all that. I've probably been doing this since I got introduced to Trap 2021. Um, and then I started trading um 2020, about the end of 2022, 2023. It's been like 2.5 years probably trading. The first group I was in was Chris Sane group. Um, I learned, I was in my process. I was really dedicated. I'm still really, really dedicated. Then I was, I was, I still keep the same practice, but back then it was a little more higher because I didn't have that well, now my kids are older, so I'm more active now. But I had more time on my hands, so I was able to look at a chart for 12 to 16 hours, literally. Um, between that, because I had my own business, it was easier. I was doing a lot of time. I had a lot of time in the charts, and then now I still look at the chart the whole day, but nowhere close to how I was doing it. So then Chris Sane group is where I started to learn trading. I got really good. I got obsessed, and I made a name in his group. Then I got my own channel um, in the Chris Sane Discord. Then I wasn't, so I wasn't, the difference now, I wasn't all in then. I'm all in now. I stopped trading for a year, and then I came back. Um, and then I was like, I need a group where I could show them how to trade. And then I thought about it, trap, but I never thought of traps because traps wasn't trading at the time. But I thought I could come in and use my skills and show people how to trade and add to his fundamentals. And that's when y'all see me coming to the Patreon, and that's when I went all in. So y'all got to witness my whole. Y'all got to witness me master my craft during. Literally, it just started with the Patreon. So that I'm saying that to say there's gonna be a learning process that's gonna take. And we're all different. Mine took a year to really. It took about 2 months to understand stocks basic. It took about 6 months to feel a little comfortable, and then I got ass again. I went on a 3 month losing streak of no gains at all. Like I was in the negative. I would have some days and then give it all back. Then a year went, and I was able to read the charts. I thought I had it, lost it, took a break, came back. Um, but I only took like a month break, came back, and then I just started studying charts. Like I really got obsessive, and then I learned it real good. Stopped. I took myself out of the Chris Hayne group, and I just traded by myself, but I wasn't all in. Got all in and traps thing, and mastered my craft. Added, I really learned the moving averages and all that, and then every day for the I don't know how long I've been in this group, 4 or 5 months. I've just been extremely dedicated, um, extremely laser focused, and because I know my purpose is to help show others how to trade, so I've been like super locked in. And I had a friendly challenge, and I'm gonna always bring it up. I forgot his name, but he was in the group. T Mac, right? T Mac, friendly challenge, and
No, that
he
was T
brought out the
Bolden.
huh?
That was T Bolden.
No, it wasn't T Bowling.
Okay,
Nah,
yeah,
that's the
you
one
had
with the
T Mac
orange.
and T Bolden.
T
Yeah,
Mac
so it
went
I
wasn't T
after
remember when
him.
Bowling.
he came in though.
Yeah, it was T Mac. Um, and ever since that day, he brought out the Mamba in me, and ever since that day, I've been super locked in. And I don't be trying to be like I could come across really bold because that's me. My confidence is super fucking high. I'm not cocky. Uh, I'm not cocky. I'm just well aware of my capabilities. So my confidence is extremely high. My aura is strong. My energy is strong. You feel me when I walk. Um, and I say that to say, I will be very blunt with y'all. Um, I could come off cross a little aggressive sometimes, but go by my intentions. I really care for everyone here and really want everyone to learn. Um, and I give tough love, and I don't feel bad at all. I would feel bad if I didn't give y'all the tough love sometimes because I feel like I'm being fake, or if I felt like I. Sometimes I know I come in a group and I just like, y'all be like, yeah, he a party pooper, but no, it's just like lock in. I don't want to have fun. I didn't come in this group to have fun. You are. It's cool to have fun sometimes, but sometimes I come in and I'm just like in my work state of flow. So when I come in, my creative mind is moving. I don't want to see that shit. It's time to lock in. So I'll be that party pooper and all that. And it's just a challenge. It's a challenge. Get your trading up with mine. That's it's simple. Like it's simple. Get dedicated. Become obsessive, and let's have a friendly competition. And we're gonna make each other greater. Um, don't your job is not to compare yourself to me. That is the killer of all progress is comparison. Don't compare yourself to me. I won't compare myself to you. I'm just here to prove that I'm a better trader than everybody in this Zoom chat. And if you think you're better than me, lock the fuck in and let's see it. We'll prove it by charts in the chat. No talking. So that's what I want. I want everybody really to really dedicate themselves to this chart shit. And lock in. It's all about confidence. Don't tell yourself you're not better than me because you're already holding yourself back. You tell yourself you're a better trader than me. We speak everything to existence, not the law of attraction, the law of assumption. You speak as if you already have done it. Or you speak as if you already have become it. So lock the fuck in. And now we're gonna get straight into the charts, the stocks. Uh,
Bet. I'm coming for you.
Meta, boom. So now support and resistance. So the weekly. So this is my actual chart. My chart will throw you off if you're new, but we're gonna take everything off and we're gonna go fast through here. All right. So candles bounce off of candles. Candles reject off of candles. Um, I wanted so current price we're at 763.28. Where if so the ball would be the current candle and we're on the weekly. The weekly is 5 candles and 1 candle. So I don't need to see 2 to 3 candles rejecting the area or bouncing off an area to make a support and resistance. I just need 1 candle. Why? Because it's 5 candles in that 1 candle. So the current candle is the ball. I need to see if the ball could reject that. The ceiling of the ball could bounce at the floor. There is no ceiling right now. So the floor would be this first green candle right here. That's my support. My next one. If on the weekly, if you have multiple candles um rejecting or bouncing in the same area, that is very strong. That's a strong support or a strong resistance because it's not just 5 candles. Now you have 10, 15, 20 candles in one area that the beams and the support. So it's becoming stronger and stronger. So we got 2 candles right here. That could be our second resistance. When my support and resistance is so close, I won't put them too tight. So I'll use a trend line because I got to delete that. We got that red candle right there in the middle. We want to know at all times where we could bounce or reject that. So this red candle right here, the body of the candle is what I'm using. I'll just bring that over the trend line and I'll keep it white. So I'm just aware of that area. And we're on the weekly, but so we're looking at it from a weekly point of view. But if we go down to the 30-minute, the you'll start to see them space out. So 736 to 751, that's too big for Meta's support and resistance because you want to know the ATR. ATR is the average true range. Average true range is how much a stock moves, how much amount of money a stock moves per day on average. So if I go to FinViz, it'll say quotation 14. You'll see the quotation around 14. That's just representing 14 days worth of data. So ATR is the average true range. So how much a stock moves on average per day. So if Meta moves, let's say $8 a day, that would be the ATR. Why? Because they calculated how much this stock's been moving every single day within those 14 days. So I'll know like, oh, this support and resistance is too big, this gap in between. So I'll have to add another support in between there. So that means I gotta go down a time frame. I'm on my weekly. Let me go down to my daily. The gap's still big. Let me go on my 4 hour. Gap still big. 1 hour. You should find I don't go no lower than 1 hour when I'm doing support and resistance. So now we'll go back to our weekly, and I'll go back to using my horizontal line, and I want the floor where the ball could bounce. I'll do right there, and I'm only using the bodies of the candles. The bigger the candle, the stronger the confirmation is. We have 1 week, 2 week, 3 weeks. That's 15 days right there. Rejecting all the bodies of the candles is right there. That's a strong support right there. So we have that. We have that right there. That second one. And then to the upside, I have fib. To the upside, damn, I cleared it. I will have to use the fib. So with the fib, I'll take the previous high. So it's the fib retracement tool right here. I'll take the previous high, this right here, and I'll use the 52-week low, and I want the base. So the most touches. I'll use this area. Why? Because we have this body of the candle, this red one right here. We have it touching right here, and over here to the left, this red candle bounced right off of the line, and we have this green line touching it. These are fake outs, these green ones that came out. I want to catch, we only pay attention to closed candles. So I'm taking the candles that closed above this line. Um, so now we have
Slow you
our,
down real quick. With the Fed, what did you use to measure it?
the
Like, where was
fib.
your start?
What was my what?
You start and your stop. Like, you went to the higher high and the lower low.
Yes, the previous high over here. This previous high.
Why
Hmm?
the red one at 751?
Why not this one right here?
Yeah,
You say yeah?
yeah. I'm asking,
Okay.
why didn't you do from that to the other low?
Because I want to see us. We haven't broke above the previous high really and held this level. So over here, if you come over here, last time we broke above the previous high, we rejected and shot back down. Right now we broke above. We broke above it, but now it's the second candle. So I don't know if it's going to bounce here or if it's going to go back down. So I want to see. I only want data that's confirmed already. It's confirmed over here that it was resistance. Over here, it's not completely confirmed yet. So that's why I took the previous high over here. 'Cause I want data that's complete. I don't want halfway. So I'm a break and retest trader. So it has to break the level, but it has to confirm it. It has to come back down and retest it. We didn't get the retest yet. Um, so yeah, that's why I used that area. Um, and I only use the fib if I have no way of knowing what is the resistance. So they have 883, but that's the weekly. So that'd be like a big a big gap. If I'm on it daily, I want to do so I could still use it, but I could keep that, but then I want to see like a current. I want to see. Let me see, because the weekly will be more so like mid swing trader, like a couple months in. Because a swing trader just 2 days or more. Sometimes I like being in for 2 3 weeks, so I might make the fib smaller. Basically, I think meta resistance was at like 815. So I'll take here this resistance here, and I'll take this previous low here, and I'll line it up right here. So it's structure that I'm using confirmed. Look how many times we bounced right here. This is the latest previous low that we created right here. All these bounces right here. The cup and handle was formed, and then we bounced and we went off. Um, I'm gonna explain what the cup and handle. This is the left handle going up. The cup is this whole base area right here. This is the right handle, but I'll get into it. Um, so I took this low and I took this high right here, this previous high, and I matched that up, and it's telling me 807 is the resistance. It won't all the time be right there, but chances are we will come up close to that. A lot of times my fibs plays out. Most of the times I would say they play out. Um, so I'll use that for my upper resistance, but in a case like this, I'll go to my 4 hours since I don't got too much data because we're at all-time highs area. I'm going to use the 4 hour and I'm going to look to see what my resistance is. I want the most touches. It's going to be here because 1 rejection, 2 rejection, 3 rejection, 4 rejection, and 5 rejection. That's a strong area. So 776.25 will be the resistance on Meta. So now I wanted to break that first one down real good because now I could start flying through. And then when you come in your 4 hour, you can see that we're missing. We have a lot of areas where we don't have support and resistance at. I just didn't finish it, but you're just looking for the floor and you're looking for the ceiling. The most touches, you need at least 2 to 3 touches. So I'll use this area. Why? Because it was support right here where we bounced this area. Look at my green mouse. I mean my white mouse. The cursor right here, the hand bounced right here. And then look, so it was support here, but then over here it was resistance. Look how we rejected this area right here. Then over here, we bounced. We rejected right here, and then we broke through. We came, didn't completely touch it. We bounced. That's an area that I'll mark, and then I'll just keep doing that. So right here we have a floor.
Could we use the pivots for that?
I thought you was about to tell me that I'm not sharing my screen. Woo!
No, you are.
Good. Pivots? I don't know what that is. Can
It's
you?
one of the indicators that put in like key points,
Oh,
highs and lows.
yeah. So I don't use indicators. I wouldn't be able to tell you about it.
Oh, okay.
Um, have you been trading for a while?
No, I am very new.
Okay, so you're gonna learn that before you start using the indicator, you need to understand the basics: support, resistance, trend line. Um, Master that first for all the new traders. Don't just throw indicators on because we all do that when we get introduced to this market. I was one of them. I got in. I had fucking inverse MACD. I had RSI, all that shit. And I was just trying to be like the masses. So I had all that on my chart and didn't know what the hell I was doing. I started to learn it, and then it honestly just complicated the process more. Master support, resistance, trend lines, and then start adding on different things. Yeah, you are the indicator. I am the indicator. I master myself in the market first, and then you can add those little things, but you honestly don't need them indicators. I'm the indicator. I I I'm a basic trader, and that's what separates me. Using my I'm using the basics, so I'm really focusing on the candles. I'm not cheating and having an indicator tell me where a robot, artificial intelligence tell me where price can go. I'm using my eyes, my research, the knowledge that I've gained to, because I'm better than a robot. God made me, so I'm be able to
Amen to that.
to that's a fact. I'm gonna be able to keep improving. The artificial intelligence can only improve if the human mind improves. But so I have no capacity, no limit. I could just keep learning. So you are the indicator. So don't really get into them indicators. We are the indicator. Um, you could add them, but it's gonna I wouldn't add them until you really mastered the game. It's gonna confuse you. I had It confused the shit out of me. It's slow. I could have been further than where I'm at. I wasted a good like half a year on indicators probably. Um, Support and resistance. I'm looking for floors. I'm looking for ceilings. Most candles touching. Um, I'm looking. I'm looking to the left, like okay, it's bouncing right here. Just follow my mouse, y'all, because I'm gonna start picking up the speed. I'm like, okay, it's bouncing right here, but if I look all the way to the right, it's rejecting here. That's the area. And then I'm gonna show y'all what else I do because I'm adding so many lines. What is it gonna do? Start playing tricks on the mind. So your mind's gonna start getting foggy as I go. Uh, so that's cool because now what I'm gonna do is find the middle ground. So that the moving averages confirm your support and your resistance. you want to see it around the area as your moving average. So I'll just take this one and I'll make this one probably orange. Oh, I'll make this orange, and then I'll probably make these yellow. That's like the warning shot, and then this is that's probably the final warning before the 200-day, and then I know if this, because this is below the 200-day, cells are in control, so I'll make these probably all red, because this is a mental game. I want to be, you want to train your mind so you don't have to look at the chart so much. It's more so of like muscle memory. So your mind is amazing. So if you have the colors, you don't have to think as much. Your mind will look at the chart and be like, oh, that's puts because this line is red. I remember in the past, I told myself if it's at red, that is puts. If it's at orange, it's the final warning shot. If it's at yellow, it's a warning shot. If it's at green, bull buyers are in control. It's a mental game. So I trained myself to remember all that. So now it's still going to be a little foggy, but you got to do it based off how your mind looks. This right here is perfect to me. I'm fine. And I know that because some people look at my chart and be like so confused, because I know when I'm doing one-on-ones with people, I'll look at their chart and it fucks my head up. But when they're looking at it, they see it so clear because we all learn different ways. Um, so meta, long story short, now we have our moving averages. We have a bull flag setting up. Remember what the bull flag is. We have the pole. So the gap up right here, the gap up means here it gapped up. Why is it called the gap up? You have a gap in between. So you just have to use your mind. This is a pole still. Even you count the gap up. This whole thing is a pole. And now what is it doing? It's flagging right now. So you want to see this green line hold at 751, your support, hold, and then you want to see a bounce. So if you was to break down, you want to see Meta do this. You want to see it come down, bounce off support, break resistance, come down. You want to see resistance become support, and then continue for more highs. Um, you have your 10-day right here. We're above that. We have a declining 5-day moving average. If we zoom in, because we want to see what our 5-day moving average is doing, strong momentum, it's trying to act as resistance. It's flattening out with the current price, but it's kind of rising up still. So there's a chance that we could retest again, go back up because it's not declining down. It's still rising up. Um, so I pay attention to all that. So, but we're under it. So that's that's not what I really want to see because we're under it. So that I know that so far, but I still need more. So I'll look at my weekly. I remember the weekly we're under the 5-day. Still rising up. We're pinned above it. I go to the daily. Okay, it's trying to act like resistance. Let me go to the 4-hour. What do I see? Same thing. We're getting closer to the 10-day. So now, do we come down and bounce off of
Director,
754?
you have to manage the department, and she's not
Um,
managing it properly.
um.
So I'm like, hmm no.
Hey,
So
Ed,
just a sec. Okay, you can unmute yourself.
when you when you was talking about your warning shots, is that the break and retest?
Uh, I'm not talking about the warning shot.
When you were doing your lines, you did your calls, your puts, and then you had a yellow or orange for warning shots. Like, do you define
The
that as a break and retest? You hit it a couple of times but didn't break.
no, no. The warning shot area would just be so normally what I'm gonna do is I'm looking at, yeah, it could be break and retest. I'll look at the structure and be like exactly what you just said. This was a big area right here. Look how many times this area we came down, we bounced. Another, wait, hold on, was this the 4 hour? So this is a support that I'm missing. Every time we came here, we bounced off of this area. So I know if we come here, yeah, it's the warning shot. Then we break here. That's the final warning shot. But we have the 200-day right here, so we'll keep that in mind. But yeah, you are correct. Yeah, you're correct.
Okay.
Um, so that's the 4 hour. Then I'll come down to the 1 hour. 1 hour now. The 1 hour, what is it doing? Okay, we're under the 5-day moving average. What is our green doing? The short term trend. It's it's rolling over. It's acting as a snake and it's becoming aggressive. It's about to cross down my 5-day. Because if it's sloping down, when the candle come up, it just smacks it and pop it back down. But then you gotta see your pin. Look at the 20-day. Look at all these wicks right here. What does these wicks means? What does these wicks mean? Put in the chat if you know what these wick means. You know what these wicks mean. Okay, that's a lot of. Do you use the wicks for the lines? I don't use the wicks for the lines. I use the body of the candles for the lines. The wicks. So, what a lot of people saying rejection. I think I know what y'all trying to say, but rejection comes from uh rejection is resistance because you're going to an area and you're rejecting it. Um, when you're going down, you're bouncing. Um, so you would be right, but it's the other way. You're bouncing. It's showing you're bouncing off of the area. You're bouncing off the floor. You bounce. In order to bounce, you got to be thrown. I mean, you could say bounce when you get thrown up, but I don't know. For me, that would be rejection. For me, this will be bouncing. So we bounced off this area. These wicks right here is telling me buyers. Because why? The wick right here, the sellers came down, but buyers said, pushed it back up. Right here, came down, pushed it back up. Came down, pushed it back up, pushed it back up, pushed it back up, push it back up. And what is this yellow line? That's the 20-day moving average. What is the 20-day moving average? It is the pullback, in this case, a pullback in the uptrend. So you want to see it come to the yellow, and now look what it did. It touched it, kissed it, and it's bouncing. You want to see it. You want to see Meta break above 766.36, which is our 5-day moving average. So as of right now, Meta looks okay because buyers come here. There's a good chance that we can um, break above this, but our 10-day is a little aggressive. We want to see it flatten up. We want to see it trade sideways a little more. Um, it's
All right,
already
hey,
started. It's the 5-day.
hey, Al.
What's up, bro?
Back to that trend line, not trend line, the wick. So you said that's not a rejection or a bounce. So that's like liquidity, money grab. That's what you see it as.
The wick.
Just trying to understand your verbiage on the wick.
The wick is yeah. The wick is basically it's just telling me who won the battle. It's telling me sellers were so like this candle right here is telling me sellers were in control, but they weren't strong enough because every time they came down here, buyers just pushed it back up. It's telling me who won the battle in that that time frame. So this candle right here is telling me who won the battle. This is telling me who won the battle. When we see multiple wicks coming from the downside, it's telling me buyers is down here. This is your indecision. You don't know who won this battle, but then you get this big green candle. So that's just telling me who won the battle. It can be liquidity snatching in the liquidity area. This wouldn't be liquidity snatching though. It'll be if it was liquidity snatching, it'll come up here. Like let me see. This would be liquidity snatching only if it did this. broke down, grabbed all that, and then shot down. This candle right here. If that candle did that. Liquidity snatching, remember your rectangle, but you have to break out of the rectangle to the upside, downside. I'm only looking at the wicks to tell me the story. The story that is telling me once I put it together is there's a chance that we can go to the upside because every time we come down here, buyers just keep pushing the price up. The only problem we have is our moving averages now. We're on a shorter time frame. It's like telling me that right now you're pinned. You're pinned under the moving averages and you're also pinned above the support. So we're gonna range in this area. And I'm seeing that because I'm seeing wicks come from the upside as well. So that's telling me we're pinned. We're gonna range right now. So Meta needs to get above 767. Um, if Meta can't get above 767, you want to see 762 hold. And right now, my yellow moving average is not that strong. Why? It's showing that it's starting to become a little weak. Because look at the moving average. It was rising up. Let me show you. It was a steep hill at one point in time. You want to see them spaced out like this. Once they start getting close and crossing, that's where you want to show some concern. Now they're starting to trade sideways. Good chance that we range right here. But when it's sideways, the trend could be changed quick. So when it's rising up and steep, like anytime that it comes down and touch it, it's gonna like pop it back up. But when it starts to go sideways, like right here, it started to go sideways, it could be pushed down more. So we were able to break through and touch the 20-day. Now the 20-day it bounced, but we're gonna keep retesting it now because the 20-day is getting weaker and weaker the more that it trades sideways, and it looks like it wants to roll over. You want to see the move before it happens. So I'm already like, okay, it's starting to trade sideways. So if it keeps going over, it'll eventually be like a hill, slope over, and then eventually decline. You want to see the move before it happens. Good chance that we lose 762. You want to see Meta hold 762. If it loses 762, you want to go to the 4 hour because once you lose the moving average on that time frame, you want to go to a higher time frame because the moving average could be lower, and it is lower. So if we lose 762, we know that it's going to come down to 754. Um, why? Because that's where the next moving average is, unless you have like multiple candles in one area, which will be your support resistance. Um, So Meta needs to get above 767, needs to hold above 767. If it loses 767, it has 762. And if it loses 762, we have 754 and we have 751. You lose 751, look for 736.80 to come on Meta. Meta right now, if you're in the play, I would start paying attention, setting alerts. You want to see it break above 767. 2 to 3 stocks like to retest an area 2 to 3 times, well, 2 to 4 times. So it normally kicks at the door 3 times. Once it touched that door 3 times, is most so the candles when it hit resistance support your moving averages, it likes to retest 2 to 4 times. So to keep if it hits it, then go back down, it'll retest again like 2 times or retest 3 times. It's like knocking at it, kicking the door 1 time, 2 times, the hinge get loose, 3 times the hinge is really loose. You kick it again the 4th time, the hinge most likely gonna break off, the door breaks down, and then you go up. The more times you hit it, the weaker it gets. So it touched the 5-day moving average 2 times. Right now, it's still telling me that it's a good chance we can go up. Why? Because the 5-day is pointing up, so price could go up. Um, so right now, if it don't break above 767, if you keep seeing nasty rejections, pay attention to how the candle pattern is playing out. Engulfing candles, patterns, and all of that stuff. So right now, Meta is a waiting game. If you didn't get in, I wouldn't even get in because it's at all-time highs. You want to see where your yellow moving average, so your 20-day moving average is on your daily or weekly. Why? Because that's the pullback in the uptrend. And if you look at it, what's the yellow doing? It's trading sideways. The 10-day is not rising up like aggressively, so it's telling me that the momentum is slowing down. um so you'll see a pullback to 725 possibly on Meta, and if it loses that, then 648 will be, because that's the pullback in the uptrend. But you got to look at the 10-day. The 10-day will be first though, so 738 will be first on Meta. um and that's basically the previous high over here, this area. So Meta, and then look how many times Meta is rejected. If it rejects this many times, but it's still holding your support area, that's good. But when it starts to lose the area, so this white line, you want to see a hold. If it starts to lose this area, you want to become wary, because it's rejecting, and then this candle right here, this high is lower than this previous high. So if this candle right here becomes lower than this previous high, what is that telling you? Sellers are stepping in. That structure. Your higher lows and your lower highs, your lower lows, your higher highs, all that. I had to take a little quick break real quick. 12:13. Okay. That's Meta. Now I can start flying. Alright. I got a long way to go, right? I'm gonna start knocking some out, and then I'm gonna start checking the chat. We did Meta. What is it? 767. You want to see it break above to the upside? You break above 767. You have 776. Above 776. You want to become wary because that's all-time highs. Above 776, you have 806. So Meta 767, 776, 806. That's the upside. Downside 751, 745, 738, 736.80. Downside 751, 745, 738, 736.80 is right now sideways. Bull flag potentially. Look for the upside of 767. Um, GS support and resistance. Remember, you start at the weekly, you work your way down daily, work your way to the 4 hour, 1 hour if the price is still too big. And how do you know that? The ATR, the average true range. Average true range is how much a stock moves per day on average. Um, GS, remember you start the monthly. You want to know the trend of GS, so we'll start the monthly. Um, Always want to zoom out. Uh, Look how the fib played out. 710 was the resistance. We rejected it, and then now we bounced off of it. We bounced off of it again. This month 786 is the target on GS if it continues to the upside. So what is GS doing? You zoom out, you want to see the overall trend. Overall trend is to the upside, and look how many times it went up then came down. This is healthy. This is a healthy uptrend. It even came and retested right here the 20-day on the monthly. That's very healthy. Then it ripped up. So now what you want to see is GS eventually come back down and retest what? The previous high. Why? Because it broke above the previous high but never came down and retest. This is the previous high, this area right here. 723 area is the previous high. So now it's, you could tell the retest wants to happen on GS. Why? Because we have a resistance, because we have 2 months Well, 1 month we rejected, and now we have this month right now. We're starting to reject. What is our 5-day moving average doing? It's starting to decline down. That's not good. We want to stay above 721 on GS. So you want to hold 721. So the first level to hold is 724. You hold 724. That's good. But if you lose 724, you got 721. You lose 721. I gotta go to the weekly because we're bouncing off areas that I can't see. Always want to zoom out, zoom in. You see with the fib, same thing. I took the previous high and I took the low to get my fibs. So what is it doing now? This could be a cup and handle play now. I'm gonna have to show you what a cup and handle is. Yes, this could be a cup and handle. Left handle would be this. This is the body, which is the cup, and this could be the right handle right here. And then we went up and we're forming a bull flag right here. So right now our resistance is 724.20. We're holding above that currently. That's an area that I want to watch. My moving averages, the green is the 10-day, is looking strong. We got some buyers right here because the Wix is telling me this is the weekly. That looks good. So every time we come down to 694, we got to bounce. And we didn't even come all the way down and touch this green candle. Oh, we did actually. Look, see, candles bounce off candles. Look how we just bounced off that red line. Look how perfect it is. Look at that. This one kissed it. Perfect. Perfect. Candles bounce off candles. They bouncing off of this big green candle right here. So all these wicks right here is telling me ours is right here. Every time we come down, we push, push, push. Then you could, what you could do is use your AV WAP. Where's your AV WAP? Above the AV WAP. So above your AV WAP. So first, the AV WAP, you anchor on important days. If Trump placed a tariff where you see the market got rattled, anchor that candle for the day. If the inauguration, anchor that candle. Big engulfing candle, anchor that candle. Gap down, anchor that candle. Gap up, anchor that candle. Important days, anchor that candle. You can anchor that candle on a 1 minute or the first candle of the day. If you miss that, then just anchor, go to the daily and just place the anchor right on the candle. And it's going to tell you where the buyer is at and the sellers is at. Above the AV WAP, buyers are in control. Below the AV WAP, sellers are in control. That's not an indicator. It's a tool that you could use. And that tool is found right here. In projection, you'll just go to Anchor VWAP. Anchor VWAP's for swing traders. VWAP, just VWAP, that's for day traders, meaning it's intraday, meaning the data is only for that day. So I got to change it every single day. My AV WAP, it's once I put it on that candle, a year later I come back, the AV WAP is still there. It's still going to let me know where the buyers and sellers at. It's going to update every day. So I'll grab that and I want to anchor this engulfing candle. This engulfing candle is telling me right here, buyers are right here. And it's confirming because now we have our support right here. We kept bouncing off. Now we have our AV WAP and what we're above that. That's telling me buyers are more in control. And now we're above our 5-day moving average. We close above 721. That is bullish. Then you want to see your targets for the upside on Goldman Sachs. You have to use your fib. It's risky. The risk to reward isn't to the upside. It's to the downside. Why? Because you're approaching no man's land. You could have a sense a feeling of where price is going by using your Fibonacci, but it's not going to be as accurate because you don't have no past data to go off of. 793 is a potential area where it could go if it holds 724. You want to see it hold 724. If it holds 724, look for 790. We'll round it down, 790 to be an area. But you're at all-time highs. What is the chance of it keep ripping and going higher and touching that 793? The probability is low. As long as it holds, so we'll go to our daily. Yeah, we want to see what our daily is doing. We're still above our moving averages and we're above our AVWAP. Our 5-day is sloping up with price up, so it's telling me on a daily it's starting to become bullish, but we're not there on a weekly yet. But if we close above 721, that is bullish, and we're breaking above our resistance. Now, do our resistance become support? If it does, buyers has a chance of coming in and sending us up to that 793. GS is bullish. GS is bullish, 721 to 722. 721 to 722 is your perfect spot for you to get into play, because I'm on a 4-hour and I'm looking at my moving averages. Moving averages could act as support because we're above all of them. So the green, yellow, orange could be like my defense. The 20 days right here on a daily, that's at 714 now. But what I could do is use the 5-day, 721, and put my stops behind there. And then I see we got the multiple wicks right here where liquidity snatching came in. That goes back to that wick question. Liquidity snatching, where the price will come down and try to stop you out. Because if it stops you out, what does it do? It snatch your money. The potential money that you could have made, it'll snatch that money and then it'll continue to go. So it'll stop you out the play and then it'll head the way that you wanted to. So it came down, snatched the money, and then went back up, came down again, because it's trying to think where most people are going to put their stops. Most people are going to put their stops in the area that they know. So this came back down, snatched money, went back up. What is it doing again? Snatching, went back up. But as you can see, the high is becoming higher every time. It's creating higher highs, and we'll use our trend line as long as we stay above our trend line. So the next time it comes up, we want to see it bounce off of here, and it's going to get higher and higher. So what we'll do, we could put our stops below the trend line and below the previous wicks to protect us. So now we're at 724. You don't want your stops too big. This is 717 though. That's big. So that's why I said 721 to 722 would have been a good stop, because you could risk about $3. But if I'm risking $3, what I want to make $9 or more, because I don't want to risk $3 to make $3. Doesn't make sense, because you lose more times than you win in the stocks. Risk to reward ratio should be 1 to 3 or more. So if I'm risking $3, I want to make $9, because if I lose twice, I just lost $6. So if I out of 3 times, I'm probably gonna lose twice. If I lose twice, I lost $6. If I won one time, I won $9. That's why it's important to do risk to reward ratio. And position sizing, very important. So I could use the green and the orange, and I could put my stops below the 5-day moving average, which would be at 720. It's just a little risky because we came down here and we keep touching this trend line. That's why the perfect entry would have been right here where the moving averages is at 721, stops at 717. You're risking $4. And then 737. What is that risk to reward ratio? The reward on that is I'm risking $3 to make 723 or so. I'm risking $3 to make about $13-14. That's a good ratio. That's about 1 to 4 or 1 to 5. Remember, I want 1 to 3. that'll help me stay in the game longer because you're gonna lose more than you win. People with 80% hit rates, 90% hit rates, they're fucking lying. Um, the best traders in the game is from about 45% to 75% win rate, and on average, about 55% is the win rate for the best trader, the trader champion. So people that's on like Twitter, X, and all that stuff telling you, in general, people do that like, oh, I'm on a winning streak. That's cool and all that you're on the winning streak, but if you're risking $1 to make $1, you only have to lose one time to wipe out half of your account because you're risking way too much of your account, or your plays don't make sense. Don't make sense at all. So you could have that winning streak, but if your risk to reward is $1, it takes one loss. But if um not worried about my winning streak and worried about my risk management, my position sizing. Oh, I have a $50,000 account. Let me try to play it safe and risk $500 to $1,000 a play. I know I could potentially lose more. If I lose, I still have this amount, this amount, this amount. If I play this amount on a play, I know the odds is higher that I'm gonna lose, but I still have this amount, this amount, this amount. I could go on losing streaks because when I hit, it's gonna make up. A lot of the times when I could go on I could lose 3 plays in a row. When I hit, it's gonna make up from them 3 losses plus more, way more. That is the importance of the risk to reward ratio. That is the importance of out the money. That's why I do not play in the money. I play out the money because I want the market. The the thing about this game with the options, the market will reward you when you prove them with that play. You don't want to prove the market. You don't want to like keep in the mindset you want to stay humble. If you think you are smarter than the market makers or whatever we say, you're gonna get smoked. So don't try to have too much confidence where you just think you're outsmarting the market. Stay humble. But when you do beat the market at that play, the market will reward you handsomely. So out of the money, the more out the money, shorter in a shorter time frame. So my expiration date is small and not like a year later, but 2 months later, and my strike is still higher than what it was if, say, I was in a contract. Say we're at 280 for whatever stock, we're at 280, and I put in a 300. So we're at the price of 280. I'm putting in a contract stating that we'll be at 300 by next year. The market's probability is going to be like 70, 80%. It's going to be high. So they're going to pay you like, huh, we already knew you was going to hit that. Take this little chunk change. But if I do, okay, we're going to hit 300, but we're going to hit it in 2 months. The probability is going to be 20 to 30%. There's no chance you're going to hit it. You give me your money. You're giving us free money. So they're going to think that they're taking your money for free. The probability is going to be really low. But when you prove them wrong, you just beat the odds. So now we didn't think you was going to really hit that. So now you get paid way more because the premium is way higher. Your delta was way higher. Your theta was way lower because they didn't think that you would even hit that. So that's why I go for out of money, shorter expirations. And I'm not spending nothing at all. I spend very, very small amounts of money on my contracts. Very, very small. Um, so if you are looking for those plays that are cheap, I got them, but you gotta do your own research though, because I don't want nobody. I could lead you to the lake, but I can't help you drink. I don't want nobody just following me and you get smoked and shit. Cause I ain't gonna care. Like I feel bad when we lose our plays and stuff, but I'm honestly putting my all in. I would never do a play and just be like, all right, this is a gamble. I did that play and I took time and I put love into it, patience into it. Um, every emotion I put into that play. If it loses, at least I know I gave it my all. So when it loses, I honestly don't have no answer. I was wrong. That's it. But when you want me to feel bad and shit like that, I don't care. Because it's like you could have traded too. You could have charted it too. Did you see what I seen? You seen we both were wrong. So if you didn't see what I see, well, you didn't give yourself a chance. You put it all on me, and I happened to be wrong. That was you trusting me with your money. That wasn't something that you should do at any time. If you trust me with your money, still chart at the same time. See what you're seeing matches up with what I'm seeing. Don't just be like, oh, he put this in, I'm following. Because when you get smoked and stuff like that, that you want to find somebody to blame it on, and it's gonna be Trap, it's gonna be me. I honestly don't care. Um, because I know I gave him an all. Trap starting not to as well, because we gotta get to that point where it's just like, all right, motherfuckers keep bickering, but he's really trying to do something special. Every play is not gonna hit. You gotta get that balance where you don't let certain people affect you, because they're just throwing misery loves company. They're just throwing their anger and stuff on you because they don't have accountability. They don't have nobody else to throw it on. So it feels better to throw it on somebody else. So yeah. So but make sure y'all trade your own chart though. Just you can follow, but please know where you're headed when you follow. Don't just blindly get in. Um, that would
Hey, I had a question real quick. I don't know if
what's up?
for the expiration date, do you go by the moving averages of what the stock moves to determine, like, if you think you're gonna go to a certain level, you go based on the time of the moving averages?
No. So I'll go by like if I'm on my weekly, um I'll go. So that's where the ATR could come in. How much does a stock move per day? I'll be like, oh, okay, moves per day on $8. If it's in the uptrend, the candle should continue to go up. You're gonna get pullbacks, but you give yourself. So if I be like, oh, it says basically based off this candles, I'll be at this price in 2 months. I want to be like, okay, well, I have to account pullbacks. So let me add on another two.
And you said ATR?
Yeah, average true
Oh,
range.
oh, okay. All right.
So I'll
I
type
heard you
in
say something about that, but I didn't catch the ATR. Okay.
word. And so I'll just type in the abbreviation of I'll type in the ticker symbol, and then I'll put FinViz ATR on Google, and then it'll pop up the link.
All right. All right. Yeah, I do remember Trap saying about that website, Finvest. I'm gonna write that down. Appreciate that.
Perfect. You're welcome. So that's GS really at all time highs is holding 691. That's good. If it comes down, if it loses it's at 722 right now. You want to see it hold above 724.20, right? That's where you want it to close above to end the week. If it don't, um, it's it's gonna be some concerns there unless you get good news or something, make it pop up. So above 724.20, you want to see it close. If it can't close there, look for 721.50. If it loses 721.50, you have 706. And if it loses 706, you have 691. If it loses 691, you have if it loses 691, you have 680. You want to see 680 hold. Um, and if it loses 680, not good. You got 662, which is previous high. If it loses that previous high, you're looking at 622 to 616, which is where I do see it coming down if we do lose that 680, because that will be a healthy pullback. And yeah, that would be the perfect area. GS right now, the risk to reward isn't there. To the upside, I guess you could play it very risky, but why when you're ready at the highs? So I wouldn't get in GS at all. Um, if you do get in, you give yourself enough time to account for this pullback. We might possibly get 793 will be the target. But honestly, most of these stocks that I give me, I'm probably going to say I wouldn't get in because the risk to reward isn't there. Eli Lilly. I know it's about to be nasty. Nasty. Decline in 5-day moving average. So look at that. The orange, thick orange line. It's like a snake. What is it doing? It's declining straight down. That's telling me the trend is definitely down. Because what is it? It's strong momentum. The more that is pointing down, like really declining down, strong momentum is really to the downside. If it's starting to rise up, the momentum is easing up, but it's really declining down. Strong momentum to the downside. Um, what is the green? Green is the short term trend, downside. Yellow, pullback, and that would be the pullback area in the downtrend. We came up, rejected, downtrend. Below our 200-day, what does that mean? Sellers are in control, downtrend. Below our 100, what does that mean? That's medium for like leaps. That's like medium. You'll come up and retest that area. If you reject that, downtrend. Eli Lilly is in a complete downtrend. Um, on a weekly, what do we have? No moving averages. We rejected the 100-day this week. Not good. Not good. You rejected the 100-day moving average. That is bad. Let's see about monthly. Oh my. If Eli Lilly loses 600, it's saying 731. It's saying 731. But the chances of that happening is slim. But on some real shit though, 555. Why is that? Because I'm missing a no, it's telling me, all right, my mistake, erase what I just said. Y'all probably like, all right, let me log out this nigga app. Is logging now. But 555 is definitely a level that I said 2 days ago, yesterday. Um, but this is why I said it. This is previous high, right? These three candles, 1 month, 2 month, 3 month. You rejected there. That is a key area. You came up, you bounced off that area. That is a key area. So now what do we have? If we lose, what did I say? If we lose 647, I said that yesterday. If we lose 647, Eli Lilly is going to 600. Where is it at now? 631. If it loses 600, it's going to 553. Um, Eli Lilly's ATR is $21.79 because it says ATR 14, $21.79. So it moves $21 a day. So it can get to 600 by Monday, and then it could be at 555 by the end of next week if it wants. Because what do we have? We lost all the moving averages. Where could we bounce at? Wow, that is nasty. I'll put my AV WAP on this gap down right here to see where sellers at. Wow, we're below 6, and it confirmed sellers were at 647. That's the area I said too that we had to hold. And then we'll put one on for today. Let's see. Sellers are in control for today because 637 sellers was at. We're at 632. I'll put it for this where we gap down at right here. We rejected that gap down, so sellers are in complete control. And then I'll even go. I normally do like I'll put the AV WAP on all-time highs and all of that. I'm not about to spend too much time though, but I am going to anchor. You could anchor your previous low, and you could anchor your IPO when the stock first went public. So I'm going to anchor the previous low from where current price is. So the previous low, we're right here. So it'll be one of these candles. I'll just anchor that area right here, and let's see, we're below that nasty. So if I anchor this low right here, I want to see if we're below that nasty. Damn, Eli Lilly, where you going? Wow, nasty. What about this low down here? There you go. What is that AV WAP doing? It's confirming what? That our support is on point. Why? because the AVWAP is right by our support. Look at that. Our support is perfect. So what is that telling me? 600, like I said. So we can't break above 647 on Eli Lilly. Look for 600 because we broke down support 647. We had a retest, we broke down again. We might get another retest, or it could just go straight down. So 600 is the target for Eli Lilly. To the upside, you want to see 647 to break 647. You got 660. Breaks above 660, you got 668. Um, where you need it to be in order to be confident and calls is you need it above 775. That tells you where the stock is. So now we'll get off of that shit company. It's not a shit company, but they getting smoked. Um, they are getting smoked bad. It looks bad. Um, this is damn son. We're approaching. We're at 2023 levels. We're approaching. That's what this and this AVWAP is from. Damn, that AVWAP right there. I had to go really far back. Where is that AVWAP? That AVWAP is from 2022. Damn, it literally don't look good in VR. 1242.
Hey, Ab, I got a quick question.
We got so many stocks. I don't know. Okay.
Hey, Ab.
Okay. I can go through that. I'm gonna run through these now. And then
Hey,
we're
Ab, I
gonna
got a quick
check.
question.
Ooh, okay.
Can you hear me?
Played out. Yep, I can hear you.
All right. Whenever we say we're looking, okay, Trap has mentioned that we have August and September tend to be lower months, right? And we are saying we're expecting some pullbacks, or be cautious because there can be a presence of pullbacks. When we're doing our plays and we're looking at, let's say, hypothetically, Google, which is at an all-time high right now, and we're expecting a pullback, is it that you would track to see the price it's at now and then whatever that contract price is, and then when you see the pullback, that will be the discount on the contract? So let's say you put it, let's say it drops down to 180, and you say, you know what, I want to do a 190 contract because I saw that it can go to 200. Would that be, I would just look at prices of a contract at 190 and 200 from now. So when it does do the pullback, I know how much it has discounted to get back to those highs.
I'm catch you. So I'm not getting the actual question.
All right, so let's look at what you have on the screen. NVO, right?
Mm-hmm.
Zoom in for me. Make it a little smaller with that top part. Let's zoom in closer to what it's currently at. All right. Yeah. So let's say that candle right now that we have at $51. I think that is.
Yep.
All right. Let's say that's what it is currently. And we say, you know what? August and September tends to have a pullback. All right. And I expect that I'm not gonna put a put on it at what that candle before is. I'm not gonna put a put at 48, right? I'm gonna say if it pulls back to 48, I would do a contract at 50. In other words, I would do a long contract that it can get back to 50. But I realized that at 50, let's say it was at $10 and it pulls back to 8. Is that which would the thought process when we're saying a pullback?
That is one of my thought process. I try to have that in mind. That's having the setup. So yeah, I'll have that and two other setups with it. I'll keep that in mind, and then I want to be more accurate. But yeah, that is one of the thought process that I have though. Only one of them. I have multiple together. But yeah,
Okay.
that is one.
I had one last week. I had one on Friday, but I was like, you know what? August 1st, the beginning of the pullback. And man, I'm beating myself up right now because it was an Apple 215. I could have catch it at 12. or Amazon, one of those at 215 at 10, and I would got my money today. And I'm beating myself bad about it. It's like, damn, but it's like early in the pullback. It's like it's August 1st. We still got tariff to come up, and we still got the Fed report in September. So it's like, don't pull the trigger now. Wait a little bit, be patient.
That
Let's say I paint the dry a little bit. Man, I beaten myself up this morning. I was like,
what
Jesus,
is that a rule that you have?
no, it's just because I'm practicing the charts. So like right now I'm looking at charts, the gaps, and then using the old formula. But what I tend to do is I use a paper trade account for like my historic pricing. So like let's say I did a chart right. Let's say I did a chart right now. I saw a gap. I saw a contract that looks nice, but then I say, you know what? Let me hold off to see if this really what the price is settling at. So I put on a paper trade for that trade. And then I sit down and I wait to see how the market really is sentimenting of it. Does it pull back? Does it go forward? When I see it pull back on that option on that particular day at 20%, I'll jump in because now I know that I have 20% discount from that particular day. And don't let it fall within a gap. I say, all right, this is a confirmation that this gap got to go back up. And then I'll win off a play because it was at $13. I catch it at 10. I know I made $300 just getting at the 13 on the paper trade with the actual money now. So if it gets 16, I done double. I done make $600. So I
Gotcha.
use the paper trade just for when I'm doing the old formula from the master class to put in entry points is like in and then let the alarm go off to say, hey, this contract has gone down 20% or this stock has gone up 5%. So that's how I use, and then now looking at the pullback in the charts, understanding the gaps, is then I say, okay, for example, Apple is now at 228, right? But it has a gap around 212, 214, right? 212, 213. So I'm saying, all right, what is the contract cost at 220? And I'm looking at that price right now. I had it record, I go out do whatever months. So if it does pull back to 212, I say, all right, I could buy a 220 contract because I know that it has discounted at this point. So it's almost like finding that support and resistance on that demand gap. I don't know if that's what it is that I'm doing. I'm still learning how you find market structure, demand and supply, and those different things.
Easy. You'll learn it. But one of the things I wanted to say, you gotta be like, so what you're doing is, I understand it, but it's not good because you're creating hesitation. And that's basically so
Exactly.
when I have a play, when I have a play and I have the whole setup and I don't follow the play because of a rule, that's I actually want to do the opposite of what you did. That's where I don't want to beat myself up. I want to pat myself on the back because I've done what most people in the market can't do. What they say 97% of traders will fail at this game. Only 3% will be profitable. So I just done what mostly nobody can do in the game, and that was what showed discipline and patience. So that's right there is where I would pat myself on the back. If I keep beating myself up for missing that play, and what I'm doing is, without knowing, creating the fear of missing out. And that will, next time it come in, I'll hesitate because I'll be like, I want to jump in and catch this. I don't want to miss it. But I'll be like, what if I lose? You start having a war inside your mind. You're creating hesitation and you're creating FOMO. So you did good by waiting.
Yeah, because like I said, last week, Apple 250 in play on my paper trader was at $10.75. The paper trade was for January. It's a January 2026 play, and it's
Mm-hmm.
currently at $26. It's now at $26. So
Fuck it.
imagine, and that was August 1st. So imagine how I feel right now. And I
Um,
tracked that play for like 2 weeks.
bro,
And then I said, I can't believe I didn't take that play.
I honestly would have been over it.
That's
2 week.
142%.
You thinking too much into it. As soon as I missed out on the play, uh, I said,
Man.
"Oh, just a sec." Before I would even, yeah, I'm gonna tell you what you don't want to hear. I would have forgot about it like 5 minutes after the play. Why? Because the definition of sanity is doing. I mean, well,
Amazing.
I know so one thing I want to say to you is thinking about something that you have no control of is just crazy. I don't care how much I could have made, to be honest, because why I didn't make it. So I would have been over that play. I would have been finding a new play. And that's it because you're beating yourself up. But
Yeah,
yeah, with
thanks
that
for
being
that.
said,
I can
yeah,
do that. I'm gonna
word,
do that.
word, bro. I gotta move on so I could go through. But
Yeah,
yeah,
man, do
don't.
your thing. Cool.
Yeah, fuck that shit. You could have had it. You would have had it, but you don't got it. So fuck it. But so the next play is yeah, we gotta be emotionless like robots in this game, bro. For real. Because we will create bad habits. So on this play right here, well, this chart MVO, I had a head and shoulders playing out. Head and shoulders, the head is this top one, left shoulder is right here, right shoulder right here. Head and shoulder is a bearish pattern. So the in order for the head and shoulders to confirm, we had to break below the base. The base will be right here, multiple touches at this red line. That's showing me is the key area. So 57 is the base. We had to break below the base, then broke down. We want to come up to the base, and we want to reject if we want puts. Why? Because that's a break and retest. That's structure being created. You don't go straight down. Look how you go down, you come up, go down, come up, you go down, come up. So that's what I mean by when we break down, people will be like, oh, we're flying today on that stock, and then the next day it'll go down. Why? Because it just was creating lower highs. You gotta be patient and look, that's beautiful. Lower highs right there, and it's still continuing right now. So 53, 54 will be the level on NVO, then 57 is the big level. If it rejects at 57, it's gonna go to $47, and then it could go to $32. Honestly, MVO, yeah, so $47 and then $32 if it loses $47. You want to see it um get above, one second. You want to see it get above 53, 55, 57, 62, 67, 71, 80, 82. This is a shit, shit stock. Shit is garbage. This is it was once at, this is what I pay attention. It was once at 150 and now it's at $51. That's not a discount. That is a trash company right there. We got to stop. Oh, dude, they haven't been this low since fucking 84. When it flies up, it's going to go right back to where no, it's telling you that this company is a failed company. I don't need to look at the fundamentals at all. Not good, not good at all. 150 to 51. This is a failed company right here. I'm I'm gonna show you 32. A good chance to come back down to $11. It's a good chance that this company goes bankrupt in a few years from now. About like, yeah, 2 years, 3 years. There's good chance that this company goes bankrupt. Uh, $11 again. This is a shit company. Um, yeah. Let me just tell you one more time. This is a shit company. In case you try to get calls on it, I want you to hear every time you look at the chart. This is a shit company. Um, yeah, don't touch that chart. That stock at all. Inverse head and shoulders. I'm about to play a quick video. It's 12:55. I don't think I'm gonna be able to get NVO PWR Uber SoFi. Shit. Damn. Got a lot to go. I don't like. I'm damn. I don't like leaving without finishing everything, bro.
The inverse head and shoulder pattern has 3 swing lows. The middle swing low is the lowest of all 3. The line connecting the 2 swing highs of the pattern is called the neckline. In the bullish instance, the left shoulder and the head forms lower lows, highlighting the existing downwards trend. The right shoulder, by ending above the head or forming a higher low, halts the bearish trend. The break above the neckline confirms a change of trend to bullish. Hence, the inverse head and shoulders pattern is a reversal chart pattern. Look to buy on breakout above the neckline or on pullback to the neckline after the breakout. The volume should increase during breakout. Stop loss can be placed below the low of the breakout candle or below the right shoulder. For the target, measure the distance between the neckline and the head. Then, project this distance from the breakout point. The inverse head and shoulder pattern has 3 swing lows. The middle swing low is the low.
That was God, y'all. He he didn't want y'all to hear me. I was talking mad shit just now. It's a lot of stocks still. That was NVO. I wanna man, I'm gonna go fast. I'm not gonna waste my time on ass companies. But I'm gonna go through all of them though. One sec. Y'all can see my screen, right?
Yeah, we see it.
Can y'all see my screen?
Yes, it's showing.
Yeah, we can see it.
Appreciate it. Thank you. The energy is now shifting. I'm about to be very blunt with these stocks. Okay. I was calm. My energy is raising now. I can feel it. So this company right here on the daily PWR, on the daily, okay, pullbacks happening. Okay. You want to see it bounce off as 379.65. If it loses so 379.65 is a good pullback. If it breaks above if it bounced off at 379.65, 379.65, 379.65, if it bounced off of there, you got 405.80. If it breaks 405.80 and hold, you have 503 as a swing, but you at all-time highs, so you have to be careful. After 405.80 at 422, 423, I would trim positions, leave runners, put in the stop loss, and then target that area of 503. If it loses 379.65, you have that stock going to retest previous high at 345, and then 337 will be it. Overall, I like this stock. It's in an uptrend and it's having a healthy pullback, but you could see 340 on this stock if it loses that 380 level. So just be careful here, but 340 area, that would be a good buy if you see a bounce there, which you should, but you'll probably see a bounce at 380. And then if you bounce at 380, you got 405, and then you have 422. PWR is a good stock. I like it. Uber is sideways. You don't trade no stocks that's sideways. Why? Because it's sideways. It's going to continue to do the same thing. You're going to get a lot of failed rallies. So if you're expecting an uptrend, you'll see it go crazy one day and be like, oh, it's going crazy. It was just at $75 Now it's at $89. Chances are it's going to reject and fall back down to 75, then come back up to $90, then come back down to 75 because it's ranging. It's just going to eat your contract up. This play right here is a rinse and repeat play by week. 1 week you'll rip up, get out. It's going to sell off. Then the next week you'll get in at the bottom, go back up. But that's risky though. So honestly, with Uber is telling me above $89, you got 91.90 on Uber, and you want 91.90 to hold. That's an area that we've been struggling with. If 91.90 could hold on Uber, you have $94, and then you have $97.50. You want to see that $89 hold though. If you lose $89, you have 87, then you have 86. 87, 86, and then you have 84. You want to see 84 hold. If you lose 84, it's coming back down to 79 area. If you lose 79, not good. Because if you lose 79, it's coming to that 100-day. And that will be at 70. So to the downside, you have 87. You want to see it hold 89, and then you have 88. Then you have 86. 86 is a level that you want to see hold. If it loses 86, you got 83. Right now, it's trading sideways. It's not a play that I want to be in at all. It's a rinse and repeat play. I guess it'll be 86 to $93. 86 to $94 is the range of Uber right now. Not much to say to it. It did do good. Right now, the risk to reward ratio ain't there. We got a nasty rejection today, and that was at that 94 area. I don't want nothing to do with Uber. Is if it keep consolidating right here, wait for it to break above 91.90. As long as the market don't pull back, but above 91.90, you have 97.50. If it could hold this level at $84, that's beautiful because if this stock does hold with the pullback, look for 106 on Uber. I do think Uber does see 106 as long as it holds that 86 level. You will see it. Even if it comes down to the 83 level, that's still a perfect spot to buy at 80, about the 80 level. If it comes down, retest that level, but it probably won't come down that low. It'll probably come to 83 level. That's a good spot to buy. And then 106 would be the target. But to the upside, yeah, Uber is sideways though. It's ranging. I wouldn't really touch it right now. I'll put it on my watch list because it's just rinsing and repeating right now. And we're fighting the 5-day moving average. We could close under 89, or we could 89.30 to be specific. Or we could close under. It's waiting game. SoFi declining. SoFi had a nasty breakout. They normally don't move like that. SoFi is going to have to pull back to 1650. Will be a healthy pullback on SoFi. We broke, and now we getting some resistance, and we got a big wick from the upside showing the sellers is here. We broke above our resistance at $22. We want to see us hold $22 for like 2 daily candles. You want to see us hold $22. And if it holds above $22, risky. You could try to go for that. Let me see on the daily. What was it? $23, about $22. SoFi risk to reward ratio isn't there. I wouldn't touch SoFi. It had a good run, but you missed the move. As of right now, yeah, on SoFi you missed the move. Wouldn't touch SoFi until it came down to 1650. 1650 or between 1650 to $15 is a good buy on SoFi. You missed the move if you didn't get in, because they'll probably reject that $23 to $24 on SoFi. But it was a good play though. Um, ain't this company dropping? Yeah, okay. God. So 167 has to hold on PANW. If it loses 167, we have 158 that we're headed to. Let's see. Let's see. I'm going to the daily. Damn, this stock does not look good. Decline in 5-day moving average. We just rejected the 5-day moving average today. Um, look for 160 to 158 to be the next target on PANW. Is in a downtrend, and on 160 to 158 will be the next level. But also, it's back to what I said: 158 to 154. I think it sees rejection if it loses 167 though. If it holds 167, it could bounce, and if it holds 167, it could bounce, and we could see 170. You need to get above 170. Above 170, you got 183, 187, 194. Remember, we got to get above 207 for PANW. Before you get in calls, you want to see it above 207. There's a good chance you see 158 to 154. You don't want to lose 154 because you'll see 130 very fast. Uh, Downtrend, I wouldn't buy calls at all. 167 has to hold on PANW. Yeah, we flying through. I'm almost done, y'all. Shit company. This is a weekly. Oh my god, the disrespect. I yeah, this is a nasty company. So all the new people, these companies right here is what you don't want to touch. This is what you don't want to see, right here. It was worth $72. Now it's worth $10. Major red flag. Um, Damn, that is nasty. And this is even a bearish pendant playing out, or you could say a bear flag. This is nasty, and it lost the floor. If it loses $10, I gotta pull out my fib to see where it's going. Nasty, nasty, nasty stock. So far this is the worst stock that we looked at today. Nasty. Yeah, so just go ahead and take that off your watch list. Try not to touch that. That's hot garbage right there. Coin. Yeah, PAV. Yeah, that ain't it. Ain't no coming back for that one. Done up. 170. What's this coin? Coin. Let me go to my daily. Coin looked good. It's in a pullback area now. It needs to get above 308.35. If it gets above 308.35, above 308.35, the target for coin will be 313, 316, 319, 327. Right now it's in a pullback, so it's a good chance that you see 378. 278. My fault. It's a good chance you see 278. Right, what would that be the next level? 278, 265. You need to see hold. But you actually have 269. So to the downside, you have 278, then 269. 265, you need it to hold. If it loses 265, not good. If it loses 265, 242, that's where it's going. Coin right now is watch list. You want to see if it bounces off the 276. 276. If it don't, you want to see if it bounces off at 269. If it don't, it definitely have to bounce at 265. Watch list though. This isn't nothing I would touch right now. So far, the only one that I said that potential would be PWR potentially. AMD might be. Let's see. AMD is constructive. We need it above 173 on AMD. Above 173, you got 180. That's your target. 180. Above 173, target for AMD is 180. It's approaching that all-time high. You don't want to really touch it. 180 will be the target. Good chance that if it loses that 172, if we can't get that 172, you're looking at 163 on AMD. So I believe it pulls back to 163. AMD will see 163, I believe. If it loses 163, then you're looking at 148. And that's probably, it's a good chance that it comes down to that 148 area. AMD right now, like I said, above 172, you got 180. Wouldn't touch it right now. Though I think, didn't this run like crazy? That's it, right?
I think it's DUOL.
Okay. Okay, cool. Thank you. It had a fail rally. Why had a fail rally? Because look at our declining lower moving average. It broke above them, but they were still declining down. That's what happens. When your moving average is still declining down, you'll experience a lot of fail rallies. You want to see them pointing up with the candles. Like right here, daily is telling us, okay, the 20, the 10 is telling us that that the uptrend could now begin. It could just now start beginning. We have 348 as the floor. So if you would have gotten that 348, right now we at 370. If it holds 370, your target is 404. If you hold 370 and you bounce, you see like 2 daily candles close, your target is 404. If it loses that, it's going to 348. If it loses 348, you do not want to touch it, because then it's going to 296. Yep, it's going to 296. If it loses, what was that? If it loses 348. If it holds 370, you got 404. It's in the sideways area. I wouldn't touch it until it was above 413. Above 413, then we could start talking. Because above 413, you got above 413, you got above 414, you got 435. Then you got 470. Then you got about 500. And then you got 530. So you want to see a whole 370. And you want to see buyers showing strength. Once you see that, you know 404 is your target. I'm almost done. Crowd. I think I got like 3 more. Crowd is nasty. Crowd is nasty. Downtrend, nasty. Not that nasty. Okay. 415. You want to see crowd hold 415. It has to hold 415. If it loses 415, then it gets nasty. Let me see something. What time is it? 1:15. If it loses 415, crowd's going to 399. If it loses 415, it's going to 399. If it loses 399, it's going to 343. It's in a downtrend. 361, you have a good chance of touching. About 13 minutes. So 398, and then 361 to the downside. You want to see it get above 470 7. It's in a downtrend. I wouldn't touch it. It's more than likely going to 400. Crowd. Short term downtrend though. So just right now, I wouldn't touch it. This was nice. This could be falling apart. You want to see it hold 176, but you're below your shorter term moving averages, so you're losing 179 that you wanted to hold. This is more likely going to 161. If it loses 161, it's going to 147. This stock right here is pulling back, so you missed the uptrend. I wouldn't get in now. A healthy area for you will be that 150, that 160 area will be a good entry. You missed the move on this though. Yeah, you definitely missed the move. The pullback is coming. All right.
AB, it looks like your battery about to die, by the way.
Yup. I got 5 minutes. Thank you. So it's AVGO is at my resistance 297. You missed the move on AVGO. Anything that keeps moving is like Nvidia. I don't want to touch it. I wouldn't touch it. 300. I wouldn't touch it. It's running way too much. It has to drop. It's just so risky touching it right now where it's at. If it could hold, if it can hold that 297 though, you could do a leap for like that 370 area. But I will wait until it comes back down to 245. You have 287 though. It could come back down to 287. No, 272. Okay, 272 is where I want to buy AVGO. All right. Now I go through the chat and the thing. It's too much in the chat. Yes, I got y'all. I have y'all. I got y'all. Yeah, I'm definitely recording it. What stock can I see it? I'm looking for a path. Yeah, you're not gonna find that path, my boy. Dark. How's baby daddy doing? Katie. Palantir. What's up, Katie? No wait. Can you quote that move? That's what's up, bro. Where all praises due to Allah, not me. Boom, 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 boom. Damn, Palantir is at 185. That was the target that I had for Palantir. The next target will be 195 if it holds 185. If it loses 185, you have 173. She just wanted to know the levels because I could tell her not to be in it. It's risky. She's still gonna be in it. That's really her baby right there. But you got 195 next. Palantir is. I remember. So I let this. I erased it out my mind, and I just thought of the one person that we had on here. I only could relate to you with one stock ever, and that would be Palantir. I used to trade Palantir when it was at $13 with SoFi, bro. Look, where is that now? I let that out my mind now because that shit would have ate me up, boy. I used to trade at $18, $13, but only reason why I ain't get in it because everybody was on it. That is the only thing that stopped me because I don't follow the masses. But yeah, fuck it. I let that out my mind though. But I hope everybody learned something. I'm on 3%. I'm not charging it. I got 8 minutes. Yeah, I hope y'all had an amazing time. Yeah, Katie, we know. You've been on that thing. $30 down, Katie. That's what's up. Eat. Get money. That's what's up. Thank you, everybody, for their time on here. Everyone stay on the high frequency. Stay focused. Stay patient. Love each other. Love yourself. More importantly, love God. Don't praise me. All praise is due to Allah. All praise is due to Allah. Bismillah. God is the greatest. I hope y'all have a beautiful day. Thank you for your time.
Appreciate
I appreciate all of y'all for your time.
Thanks,
We be busy and stuff like that, but peace, love, light, and healing. Make someone smile. That is your job, to serve others, and that's how you make God happy, and that's how you become your highest physical form that you could be. That's how you tap into your soul and be on your spiritual level, because we're not human beings, we're spiritual beings. If you know, you know. Kings, queens, gods, and goddesses, God is within you. Speak highly of yourself. Don't disrespect others, because you're disrespecting the God, because we're all made from God. Black mud. Love your life. Life is beautiful. You're going to face adversity. You get through it and make you stronger. I got through mine, and I've been through a lot. Whole fucking lot, and it made me who I am. As y'all know, I lost my grandfather, I lost my older brother. Everything happens for a reason, but I feel really good though, really good. After I had the little mourning process, I feel really good though, because I got their strength now and my grandfather's wisdom. Life is beautiful though. Peace be upon you. Assalamu alaikum. Love y'all all. Blessings.